Trump's trade war does not seem to have caused a stock market crash. The Fed's normalization policy does not seem to have caused a stock market crash. The lofty levels of the indices does not seem to have caused a stock market crash. So what will? Well, a recession. But do you see a recession? Let's take a look. There are plenty of bear market traps set for the stock market. And this chart here from Yardeni.com shows the unemployment rate and bear markets in stocks. And you can see that oftentimes when the unemployment rate is low, it could be a precursor to a bear market. And we are at a current relative low there in August at the far lower right of this chart. But if you go back, you can see other relative lows where bear markets did not occur, such as here in late 1990 to 1991. Also back here in 1953 to 1954. Now, at this point in here, again, we're at a relative low in the unemployment rate, but there doesn't seem to be any sign of a bear market in stocks. Let's go to the next chart. And this chart here from Yardeni.com is the initial unemployment claims and bear markets in stocks. And this is somewhat related to the previous chart. And as you can see, we're at a relative low as of September of this year, but no recession, no bear market in sight. The relative low here was in 2006, but the bear market did not occur for another, say, year and a half. Now, this point here in the year 2000 was coincident with the bear market at that point. And this low here, though, was not. The bear market actually occurred prior to that. And one can argue that there was a relative low here in the 1992 to 1995 period, but no bear market. And also a relative low here in, say, 1984, but no bear market. And once again here in late 1977 through maybe 1979, no bear market occurred until 1981. Let's go to the next chart. And this chart from Yardeni.com shows the 10-year U.S. Treasury yield less the federal funds rate. Essentially, it shows the yield curve and the flattening of the yield curve. And when we're on a verge of inverting, sometimes a bear market can occur. But here in August, we're still a ways away from an inversion. And even when there's been an inversion, such as here, the bear market did not occur until some time later. And this bear market occurred actually prior to the low, but we had a relative low here in 1998, here in 1989, and other periods such as here in, say, late 1979, 1980, when bear markets did not occur until later. So this also shows that there's no guarantee of a bear market or a recession. Let's go to the next chart. And this chart here from Yardeni.com shows the 10-year Treasury yield and the bear markets in stocks. And we've talked about this chart, or at least similar charts of the bond yield several times, simply because a rise in the bond yield oftentimes coincides with a stock market event. Now, again, this is showing the bear markets. And as we can see here, as of September 14th, there's no real sign of a bear market yet. Going back in time, we can see the rise here in, say, 2013, 2014, yet no bear market, no recession. Back here, 2006, again, the bear market didn't occur for another, say, year and a half. But there were other periods in time, 1996, here in, say, 1994, 1995, and then 1990. These rises in the bond yield did not trigger a bear market in stock. And although the bond yield is one of my favorite indicators, it isn't always a precursor to a bear market. So let's go to our last chart. And this chart here from Yardeni.com shows the S&P 500 bull and bear markets and the corrections during the period of 2008 through 2018. And since the beginning of the year, the S&P 500 is up about 9.6% so far. Since the low of the correction there in February, we're up about 13.5%. And as you can see, over the time frame from 2008 through 2018, we've had a number of corrections and consolidations. Those are all relatively healthy. I'd like to see another one coming up, but we are comfortably above that 200-day moving average, as you can see, which is in red, the red line there. The S&P 500 is comfortably above that, but it's not elevated so high that I would expect any kind of correction. So from my standpoint, at this point in time, I don't see any bear market or correction or recession on the horizon. So we move onward and upward. And for ChewDog charts, thank you.